Good afternoon, everybody. My name is Emma French, and I'm the Queensland State Sales Manager for the developer team here at REA. Welcome and thank you for joining us this afternoon for our Queensland and Northern Territory Developer Property Market Update. If you have any questions throughout today's webinar, you'll notice the Q&A function down the bottom of your screen, so please pop them in there and we'll get to them at the end of the presentation. But without further ado, please join me in welcoming Cameron Kusher, our Executive Manager for Economic Research. Over to you, Cam.
Thanks, Emma. Thanks everyone for coming today. I'm just going to share my screen and we'll jump into the presentation. If I can get my mouse to work, there we go. So I'm going to cover off on the Queensland and Northern Territory property market. I'm going to give you some pretty general property market insight into what we're seeing largely on the for sale section of our site, but I'll also take you into what we're seeing with land sales since home build has been announced, and then delve a little bit more into what we're seeing developer specific. But I think generally speaking, we're actually seeing the market recover quite well, particularly in Queensland as restrictions have been eased. Home builder is proving to be very successful, and I think just the affordability gap between a market like Queensland and some of the other states is proving attractive for buyers. So it's definitely not all doom and gloom out there in the market. I think in saying that, there's still some challenges as to what's going to happen after home builder finishes at the end of this year. And also the apartment market, which is largely missing out on home builder. There's still going to be some challenges in that market too, especially with international and domestic borders shut at this stage, and home builder dragging a lot of renters out of renting and into owning their own home. But we'll delve into it and dive into it and get through what we're seeing at the moment. So to start with, if we look at search volumes, you can see, and this is a trend that we've seen right across the country. When we went into COVID lockdown, there was this big fall away in search volumes in March, from about the middle of March. And fell for about 3 weeks, and then we saw a fairly sharp rebound. You can see in Queensland, for sale search volumes jumped about 18% in 1 week. And they were generally pretty strong through to about June. And then it's been a little bit more volatile over the last couple of months, but we have generally been seeing further increases in the number of people coming to realestate.com.au and searching for properties for sale. You can see also, compared to the same time last year, there's significantly more searches taking place. Similar story in Northern Territory. You can see the fall away, the bounce back, and then a little bit of volatility more recently, a fall last week. But again, search volumes are a lot higher than they were at the same time last year. And what this suggests is people are still closely monitoring the property market. Sure, there's probably a lot of tire kickers out there with not much else to do, so they're looking at what's available. But I think that the point is the fact that they have an interest and we're getting eyeballs to the properties that are listed for sale. If the right property came up, they would probably jump at the chance to purchase that property. And if we look at a national level, you can see that in both Queensland and Northern Territory last week, that the volume of searches was at a historic high. You can also see that in a number of other states, generally speaking, the falls have been fairly moderate. Victoria and Western Australia have been the exceptions to that rule. So in Victoria, there's been the second round of lockdowns, which has clearly impacted on search activity. In Western Australia, it's actually a very different story. So we did see a spike in search volumes up to the first week of June. And then as soon as home builder was announced, we saw a lot of the search behaviour in Western Australia switch from being from the for sale section of our site to the new home section of the site. And obviously the $25,000 that the federal government was going to give to people to build a new home in Western Australia was attractive. But then the state government in Western Australia provided further stimulus. And we have seen a lot of the eyeballs taken from the general for sale section of our site to the new homes section, people looking at developer stock, looking at builders and who to build with. And that has happened elsewhere, but it hasn't been as dramatic in the other states, particularly Queensland, as what we've seen in Western Australia. Compared to a year ago, though, you can see that volumes are up substantially. In Queensland, they're up almost 39% search volumes. In the Northern Territory, they're up more than 43%. So fairly big increases over that period of time. I'm not going to run through too much on the rental market, but I do think it's important to consider, especially when we talk about new housing and we think about inner city apartments in particular. We know that a lot of the demand for those properties is from investors initially, and they end up as rental accommodation. And I think it's fair to say that rental search volumes are actually holding up reasonably well when you consider that there's no migration to Australia at the moment. And a lot of people are now looking to go and buy their first home, which is going to ease demand on the rental market. So I think what's actually happening is people that are renting are keeping a very close eye on what's available and at what price. And equally, landlords are doing the same thing to get a feel for what the market looks like. But again, you can see the trends are very similar to what we see with for sale searches, a slump in March and early April, rebounding quite strongly, and then just a little bit more volatile week to week over the last month or two. Northern Territory is a bit of a different story. Didn't really see that massive slump that we saw elsewhere in rental searches. Keep in mind that a lot bigger share of the population in Northern Territory are actually renters. It's a very transient population, and people don't often, unless you're from Northern Territory, tend to stay there. You go there for work and then leave. So we haven't seen the slump, but we've definitely seen the volatility week to week. But in both states and every state, the volume of searches for rental properties have fallen from their peak. You can see in Queensland, it's down 15%. You can see in Northern Territory, it's down about 11%. But again, have a look at the year-on-year figures. You can see Queensland search volumes for rental properties are still up 21% from where they were 12 months ago. And in Northern Territory, they're up 23.5%. So, very close eye being kept on the rental market, despite the obvious challenges that it has at the moment. One of the other things we've started to look at is the number of properties each week that are listed for sale on our website, and then they're moved from the for sale section to the sold section, which gives us a good proxy for what's happening with transaction volumes. Now, I've only got a couple of years, unfortunately, but it still gives us a good idea of where we're traveling now compared to last year. And you can see that over recent weeks, sales volumes in Queensland have been quite a bit higher than they were at the same time last year. And they're pretty much back at around levels we were seeing before the COVID-19 shutdown. I think it's also important to look at what happened during that lockdown. We definitely saw sales volumes fall, but transactions were still taking place in the market. So it was never got as dire as a lot of those predictions that we saw about the housing market essentially shutting down through that lockdown period. Northern Territory, obviously a much smaller market, a lot fewer sales each week. So the lines tend to be quite volatile, but generally speaking, some weeks up, some weeks down, but sales volumes are tracking fairly similarly in Northern Territory to the levels we saw at the same time last year. And if we look across each of the states, so in Queensland, last week, there was almost 30% more sales than there was at the same time last year. In Northern Territory, again, very volatile and small volume, but up 78% from the same time last year. And Victoria, clearly in a lockdown at the moment, is the only state where those sales are actually lower than they were at the same time 12 months ago. And I think this is important to consider, both once Victoria comes out of lockdown, but also just more generally when we think about some of the commentary about the housing market through COVID. Yes, we're definitely in a recession. People are losing their jobs. Some businesses are going to go out of business and won't be able to open back up again. But equally, people can't travel overseas. They're limited on how they can spend. So they do have a lot more money in their pocket. And interest rates are the lowest they've ever been. You can get a fixed rate mortgage at 2.25%. And I think a lot of people are looking to the property market because those interest rates are so low to go and upgrade their property and move into something a little bit more desirable at this time. The land market, though, is a really interesting, and this is a trend we've seen across each of the major states, New South Wales, Vic, Queensland and South Australia, that there has been this big jump in vacant land sales since the announcement of home builder. You can see through most of this year, tracking fairly similar to levels last year. Sales last week in Queensland were about 75% higher than they were at the same time last year. And you can see how much stronger they have been since home builder was announced. So it's, I think part of this, I mean, you think about how people actually list on REA, particularly developers. A lot of the residual stock of a project will go into the general for sales section of the site. So that's where some of these sales are happening. But also I think it's good news for builders, because there are a lot of people that are looking to go and construct new homes at the moment and just finding that block of land. And if we look up, that's a slide I actually meant to take out, sorry about that. If we look at the next slide, what we're looking at here is our weekly demand index for properties for sale. And the demand, I guess demand's a bit of a nebulous idea, but how we try and define it at realestate.com.au is by looking at the behaviour people undertake when they're looking at a listing. So we actually put it into 3 buckets: low demand, medium demand and high demand. And this demand index looks at the activity of people showing high demand. And someone that shows high demand has characteristics of someone that has typically shown to be close to making a decision about transacting on a property, whether that be a property for sale or a property for rent. So someone with high demand would be someone that comes to a listing, looks at all the photos, looks at all the floor plans one day, and then comes back numerous times in the future and looks at all the photos. They might send an inquiry off to the agent. They might save the inspection time. They might save that listing. They might email that listing to a friend. On the flip side of that, a low demand interaction is probably someone that comes, sees a listing, flicks through a couple of photos and moves on and never comes back to that listing. So what we're looking at here is specifically those people showing high demand. And you can see, again, a familiar trend, quite similar to what we saw for the search volumes. A big fall away in demand in March, a strong rebound. But I guess the good news in Queensland is that those high levels of interaction are continuing. So it would suggest to us that there are a lot of people out there that are strongly considering purchasing a property in the next little while. And it's the same story in Northern Territory as well. The fall away, again, not as dramatic as what we've seen elsewhere, but a strong rebound in that demand index, and it's starting to trend higher again at the moment. So it says to us that there's definitely demand out there in the market. It's just finding that right property for those people. And obviously from a new development perspective, the argument might be, well, don't go and buy something that's established. Come and talk to us and build your dream home in our lovely housing estate, or come and buy your dream apartment in our great new project that we have. So if we look at demand, so what we call it is a high intent listing interactions. And you can see here, last week was a record high in Queensland. It was also a record high in Northern Territory. And if we look year on year, the volume of those interactions in Queensland is up 41%. It's also up 41% in Northern Territory as well. Yeah, but just more generally, you can see that demand is really strong right across the board outside of Victoria. And obviously there's some reasons why Victoria's demand's dropped so dramatically. But again, I think this really talks to the impact of the very low interest rate environment and the fact that interest rates are going to be very low for a number of years. People are certainly now thinking more, a lot more about maybe going and buying a property at this stage. Another look at how the market is performing is looking at what's happening with views per listing. And you can see here, we've got the views per listings data across each state. And you can see in Queensland, generally views per listing are quite low. Western Australia and Northern Territory, the only two states or territories where it's lower. Northern Territory actually having the lowest number of views per listing. But let's break it down a little bit. So in July, for a property for sale, you're typically getting about 850 views per listing in Queensland, about 500 in Northern Territory. But if we look at where we're at now compared to where we were in February, and February is really indicative of how things were before COVID hit, you can see that in Queensland, views per listing are up 31%. In Northern Territory, they're up almost 30%. And year on year, there's been big increases as well, a 49% rise in Queensland and a 61% increase in Northern Territory. So it does highlight that of those properties that are out there, we're getting a growing number of eyeballs to look at those properties. And then if we look across Brisbane at how this looks, so Brisbane's west is getting the highest number of eyeballs, followed by the south, the north, and the inner city. So you can generally see it's those inner city markets that are seeing the highest number of eyeballs to each listing, and the southern area of Moreton Bay. But have a look at where the growth is. It's a very different story. So, and I think it's probably, even though this is more relevant to the for sale side of our site, I think it's very relevant to developers, because have a look at where people are starting to look, particularly land developers. The growth is in Ipswich. It's in the Moreton Bay South region, Brisbane North, which does include some new housing areas, and Moreton Bay North as well. So a lot of the areas where housing prices are lower and we are seeing more new housing, that's where we're actually seeing the growth in views per listing at the moment. So again, probably a good conversation to have, you know, and trying to move those people from looking for an established home, you know, to taking this 25 grand you can get from the government, and the other benefits you can get from the state government, and purchasing and building a brand new property. And then if we look in regional Queensland, again, Golden Sunshine Coast seeing the highest number of views per listing. But the area is actually seeing the greatest growth. Well, Queensland Outback, but very low numbers of views per listing there. But places like Townsville, Sunshine Coast seeing really strong growth over the last 12 months as well. And even the Gold Coast still seeing some quite strong growth, but really right across the board, you can see Toowoomba and Cairns are the only markets that haven't seen more than a 50% increase in views per listing over the last 12 months. And then in Northern Territory, we don't get the same granularity, but having a look at the data, pretty strong growth in views per listing in Darwin as well, up by almost 2/3 over the last 12 months. Northern Territory Outback also seeing some pretty strong growth. And then again, I think it's important to have a look from a rental perspective, because I think it does tell us a lot about what's happening in the market. You can see in Queensland, rental views per listing overall have been trending higher. Same case in Northern Territory, but Northern Territory amongst one of the lowest for views per listing across the country. But if we jump into it again, so in Queensland, you can expect about 1,500 views for every rental listing. In Northern Territory, just under 1,000. But if we look at where things are now compared to where they were in July, you can see Northern Territory views per listings up 47%, Queensland up 14%. And year on year, both have seen increases, although the increase in Queensland has been fairly moderate, up just 3.8%. But again, delving into the data, you can really see the impact of COVID on the market now. Look at those inner city areas, and again, you know, a lot of overseas students, a lot of younger people that have lost their jobs would typically be renting in the inner city or the west or the southern suburbs. And you can see year on year there has been a big fall away in views per listing. Moreton Bay South has actually seen quite a large jump, up 58.1% over the last 12 months. And again, I guess a lot of the commentary around renting tends to focus on what's happening in the inner city and demand there. But I guess people tend to forget that, you know, only 10 to 15% of the population actually works in the inner city. And there are a lot of people that rent that have no reason to be traveling into the inner city each day. And I think the other thing from COVID is people are starting to appreciate a bit more area. You know, maybe there's a bit of a turn away from small inner city apartments to rent, and maybe some people are looking for larger properties with more open space. And that's why we're seeing some strong growth in some other areas of the city. And then regional Queensland, the highest number of views per listing is actually the Sunshine Coast. And it's also seen the strongest growth overall, up 54% over the last 12 months. Wide Bay seeing a large number of views per listing for a rental property as well, up 46.5% over the last year. Gold Coast a bit lower and actually not seeing the level of growth that maybe you'd expect, up 11.5% over the last 12 months. But generally speaking, regional areas are seeing an increase in views per listing for rental properties. Cairns, Townsville and Outback Queensland, the exceptions to the rule there. And then again, in Northern Territory, we don't get as much granularity, but you can see very different performance between what's happening in Darwin and what's happening in the outback areas of Northern Territory. So in terms of prices, I think another important thing to remember here is, firstly, the Brisbane housing market hasn't been particularly strong for a number of years. It's certainly not ridden the wave of growth that we've seen in Sydney and Melbourne. And obviously Darwin's a completely different kettle of fish. The market's been very challenged over recent years and generally been seeing prices fall. For a market like Brisbane, I actually think that plays as a bit of an advantage as people are given more flexibility to work. And we talk about people working from home, but I think the reality is for most people, there's still going to be an expectation that they come into the office on occasion. And I think this is actually where places like Brisbane, Adelaide, and maybe even Hobart and Canberra have a bit of an advantage. Because housing's so much cheaper, the flexibility that people are actually given might be to have that Sydney or Melbourne job, but to do that Sydney or Melbourne job from another city. So that could be anywhere in Southeast Queensland, because you can jump on a plane and be in Sydney in an hour and a half. It might be Adelaide because you're an hour flight from Melbourne. It could be Hobart because you're an hour's flight from Melbourne and a little bit longer than that to Sydney. So I actually see it's not just necessarily about people working from home and moving to regional areas. I think it actually opens up some of the more affordable secondary capital city markets as a viable alternative to being located in Sydney or Melbourne. And if we look at what's happened with pricing in Brisbane and then some of the larger regional markets, prices generally holding up reasonably well over the last quarter. You can see in the black there. The exceptions are certainly the inner city, which is feeling the impact of the unit market, I feel there. And you can see some moderate falls in the west and the north. But most other areas are still seeing price growth or largely avoiding price falls. The regional market's a bit more mixed. You can see Townsville, Fitzroy and Cairns seeing price falls, whereas prices are still pushing higher over the last quarter in the Sunshine Coast, the Gold Coast, Mackay. So definitely very mixed there. But I guess it's not a kind of one size fits all thing with the housing market. We're definitely seeing weakness in some areas, but other areas are still doing really well. So moving specifically to what we're seeing in some of the developer space. And this chart here is looking at the year-on-year change in developer page views for Queensland. And what we can see is there's been a big jump year-on-year in the number of page views for land estates and for apartments. But the land estate one has been a larger increase. Now, interestingly, we were seeing a jump in page views and inquiries before Home Builder was ever announced. It actually started to trend higher in April and May. And then early June, we got, the announcement of Home Builder. And that just took page views and inquiry to the next level. It did ease off a little bit in July, but it's still significantly higher than it was a year ago. I mean, have a look at land estates. Page views are still up about 140% from where they were 12 months ago. For apartments, they're up about 100% from where they were on 12 months ago. So it clearly shows you that demand or at least people thinking about, brand new properties is quite strong. And then if we look at inquiries, it's a little bit of a different story. Again, both are seeing higher levels of inquiry than they were at the same time last year. And again, particularly for the land estate, Home Builder is having a big impact. But again, the inquiry levels started to pick up before Home Builder. In June, it shot up about 350% higher than it was at the same time last year. And whilst that fall looks quite dramatic, it's still 150% higher, the number of inquiries to developers in Queensland this year compared to last year. So really strong numbers there. And if we actually, I haven't shown you here, but some of the other states, we've actually seen developer inquiries lower now than they were a year ago. In Queensland, they're still up quite a bit. It's still up about 25% from where it was 12 months ago. But the nature of where inquiry is going to has really changed. You can see generally it's been pretty close between a 50-50 split between land estates and apartments in Queensland, although apartments have generally got the bulk of those inquiries. But over the last 4 or 5 months, you can see how that's really changed. And land estate inquiries are now about 65% of all the inquiry that we're getting from our website, whereas apartments have shrunk to about 35% of all inquiries. So there has been a real changing of the guard there. Now, I haven't put this data in for Northern Territory just because the volumes are very low and there's quite a few months where we don't actually have any data, so that the charts do look a bit funny. But generally speaking, across all states and territories, the trends that we're seeing for Queensland are reflective of what we're seeing elsewhere. So last couple of slides, the first one here is about consumer confidence. And consumer confidence is kind of a bit of a nebulous thing, but it's really important, because if you're going to go out and spend, a few $100,000 on a property, you want to be confident that you're going to keep your job. You want to be confident that the economy is going to be going well, that your family is going to be healthy. And if we look at consumer confidence, it's been trending lower since 2018. And then at the start of this year, we had the bushfires, which pushed confidence even lower. And then, of course, in March, we went into COVID lockdown, and we saw the biggest slump in consumer confidence we've ever seen. This data goes all the way back to 1974. It's never been lower. You can see on the chart there, it's much lower than it was during the global financial crisis. But by the time we got to June, I was pleasantly surprised by how well consumer confidence has rebounded. It was almost back over 100 points. It certainly wasn't back to where typical levels are, but there was so much unknown in March. If you told me that confidence would have rebounded that quickly, I would have been very surprised. Unfortunately, we did have the second wave of infection in Victoria, and that dragged consumer confidence nationally much, much lower. But the last 2 weeks, so we got a 2.4% increase the week before last, and then a 4.6% increase last week, as those infection numbers came down, as New South Wales continued to avoid a breakout, and other states did as well. So I'm reasonably confident, as Victoria can, if it can continue to keep infection rates under control, and the rest of the country can as well, as the economy starts to open back up again, I think confidence can recover pretty quickly. And I think that's going to be really important for residential property. And the business confidence side of things is also important. And again, you can see that V shape, a big fall away, a rebound. So this data is for July. It doesn't yet include the stage 4 lockdowns. So we're probably, with our next release, going to see a slump in business confidence and business conditions. But again, as Victoria starts to open back up again, I think we can see a pretty quick rebound in both confidence and conditions. The main challenge for business confidence and conditions from here is what's going to happen with investment from businesses, and what's going to happen to unemployment, because the Reserve Bank is forecasting that the unemployment rate's going to hit 10%, and that is a lot of people out of work. And how quickly that unemployment rate can fall is really going to be imperative for the confidence of business and the conditions that businesses operate in, because having high rates of unemployment doesn't just hurt your business, but it means that there's a lot less spending out there in the market as well, which is really going to be a challenge going forward. And the reality of a recession is ultimately that some businesses won't come back. Some of those people that lose their jobs may never get those jobs back, or will never get equivalent jobs back. And we tend to find the unemployment rate takes a long time to fall after a recession. The Reserve Bank is saying that the unemployment rate will hit 10% by the end of this year, but it's still going to be 7% by the end of 2022. So you can see how it's really important for government to put in place policies that allow that unemployment rate come down quicker, and that's going to be to the benefit of the whole economy. So that's the end of my presentation. I'm going to hand you back to Emma for the Q&A section of this, but before that, we're going to put up a poll, and we'd love if you could answer that poll for us. Thank you very much.
Thanks, Cam. All right, got a couple of questions here. We saw that the demand index was at record highs. What do you think are the biggest driving factors for that demand in Queensland and Northern Territory?
I think there's a few things. I think there's a level of pent-up demand out there in the market. As I said, both Northern Territory and Queensland housing markets haven't been particularly strong over recent years. I think also just the fact that there's a lot more affordable, particularly in Queensland, than New South Wales and Victoria. And I think I'm definitely hearing stories of people from New South Wales and Victoria looking to make the move to the Gold Coast or the Sunshine Coast. So I think that's part of it as well. Infection rates have been quite low. And I think the big one is just the cost of borrowing and the fact that the Reserve Bank has said that interest rates are going to be on hold for 3 years. And the reality of that, at least 3 years, the reality is I think they're probably going to be on hold for more like 5 years, if not longer. So you can borrow at basically nothing. I know it's not quite true, but very low interest rates. And people can't go on overseas holidays. People can't go on domestic holidays. I mean, a lot of people go overseas once a year, and if you go to Europe or you're going to America, you're probably budgeting to spend $15,000 or $20,000 on that holiday. You can't do that anymore. So why not go and get yourself a nicer place to live or do a renovation to the place you're currently living at? I think people are starting to think that way, especially because there's not really any clarity as to when we are going to be able to go overseas again.
Yeah, exactly. I guess in both Queensland and Northern Territory, we've been quite fortunate during COVID, and we haven't gone back into a second lockdown as yet. We spoke just before around southern state demand and that migration from some of those southern states. From what you've seen, have you seen that interstate migration skewed more towards an owner-occupier style product or an investor style product?
Yeah, I mean, if you looked, I haven't looked for a while, but when we looked, I last looked at the migration stats, and they don't put it out that often, but it was actually the Gold Coast and Sunshine Coast, which were the preferred destinations for people migrating to Queensland, and then Brisbane coming in third. But it was young families. It was sort of people aged 45 to 60, and then children aged sort of 8 to 15 years of age. So it's really that family profile, which really profiles up, I guess, as an owner-occupier market. And I guess if you're coming out of Sydney, there's a very real chance that a lot of those people have never actually owned a home in Sydney because of the prices. So they come up to Southeast Queensland. You know, once the borders are back open, they can potentially get home builder. They can potentially get the first home buyer stimulus that's in place as well. So it starts to look pretty attractive, especially if their businesses will give them that flexibility to, you know, work locally or maybe jump on a plane and go down to Sydney or Melbourne for 2 days a week and work for the head office. And I think that's more of what we're going to see going forward. And I think that really probably doesn't help Darwin too much and Northern Territory. It's a little bit more remote, but certainly Southeast Queensland, Adelaide, Hobart, I think it definitely starts to help those kind of markets quite a bit as well.
Yeah, absolutely. And why do you think there has been such an interest in vacant land, or such a large increase there?
I think ultimately it's coming back to home builder, right? And I think, that vacant land could be any vacant land. It could sort of be, leftover developer stock on the outskirts of Brisbane or the Gold Coast or Sunshine Coast, or it could be that piece of vacant land that someone owns in the middle of suburbia. But I think people are not just necessarily thinking about, okay, home builders here, I'll go and buy in a housing estate. People are thinking, okay, well, let's find a piece of land somewhere that we really like. Let's go and find a builder and let's build our home. So I think it's working in both of those ways. But I think obviously the stimulus and the 25 grand that the federal government's willing to give you makes you reconsider buying an established property and starting to think, well, maybe I just build my dream home and get what I want and get it where I want.
And on that, the $1 million question, what are your predictions around what is going to happen to the market when that home builder grant does come to an end?
Yeah, that's the big question, right? And I think there's definitely going to be some challenges because ultimately home builder is probably going to exhaust first home buyer demand. You're pulling forward a lot of first home buyer demand into this year. We know that particularly new housing, whether that's apartments or homes, is very reliant on people that aren't yet citizens of Australia wanting to buy a home and therefore having to buy a brand new home. But I think enough people are talking about it. And I think the government, there is a lot of people lobbying for the property sector out there. You've got the UDIA, PCA, Master Builders, HIA, And we all know that there is a big multiplier effect from the property space as well. So whilst they've only announced home builder, I would suspect once home builder comes to the end, there's going to be some other form of stimulus, and even just rejigging home builder maybe, and allowing it for smaller renovations or things like that could really have an impact. And I think obviously the apartment sector is probably crying out very much for some stimulus that's more targeted towards that sector. But I think it will happen. The things you talk about a lot, they're not the things that kind of put you off where you need to be. It's those things that you don't see happening, like COVID, that really upset the apple cart. So, and we know that Scott Morrison ultimately is a property guy as well. The banks are all very focused on the property market as well. So I think we'll be all right. But I think there's definitely a knowledge out there that once home builder's done, it's going to have to be something else.
Speaking of what everybody's talking about, we see the media report a lot on, massive predictions of huge housing value drops. Your data shows, and our data here at REA shows that it's been quite flat within Queensland and New South Wales in terms of housing values, and we've even seen some increases. What's your future predictions around those housing values?
Yeah, look, I think everyone's underestimating the power of those low interest rates, and I actually think by the end of this year, prices could be a little bit higher than they were at the end of last year. Not a lot, but I think they could be a little bit higher. But I think there's going to be growth, but I don't think it's going to shoot the lights out. And obviously we get to the end of January, mortgage holidays end, JobKeeper starts to get wound out from September, but is still available till April. And that's when we start to see more of an impact of this higher unemployment rate. So that's potentially where there's some challenges. But I think people are underestimating the resilience of the housing market. And I do think that we are actually going to see some small amounts of price growth out there in the marketplace.
Thanks, Cam. And to cap it all off, give us your crystal ball prediction. What's your forecast looking like for 2021 and beyond?
Yeah, 2021, I think a lot of it really is going to be dependent on what happens with the international borders. Qantas came out last week and said they're not resuming international flights to the middle of next year. So I think the first half of next year, depending on what sort of stimulus we get, could be a little bit challenging. But I'm fully expecting once those international borders are open again, that there's actually going to be a higher level of migration to Australia. A lot of people are going to want to come here. And I think the government's going to be very welcoming of those migrants. I know the university sector's desperate to get people back as well. So I think 2021's going to be more challenging than 2020, but I'm certainly not expecting big price falls during next year.
Great. Thanks, Cam. And thank you to everyone for your time this afternoon. It is very appreciated. We have recorded today's webinar. It will be available on the Development Hub, but please feel free to reach out to your account managers if you've got any further questions. Have a great
Thanks, Emma. Thanks, everyone.